We're back with part 2 with our conversation with Sindre Talleraas Holen, head of M&A at Visma. We continue our discussion about cross-border M&A, executing deals so they're successful, how Visma specifically operates, working with private equity. How do you keep the cost of diligence low? I feel like that's the other flip side, because everybody will tell you, do your diligence. Even the point you made earlier is you're spending more, even looking at hiring a big name consulting firm to help with diligence. Look at me. I'm Indian, man. I'm cheap. I'm just it's in my DNA to not spend money on things that you're not going to get money back on.
Oh, yeah.
Which happens if you're going to do a deal and all of a sudden you're we can't do this deal. Or you get deal fever then, where I'm invested in and it's feel like I have to do this deal because I'm already financially invested into it.
Yeah. It's a good question, right? And we are in Visma as well. We are a trade buyer. We're an industrial company. Are we concerned about fees? Absolutely. That's also why we have an in-house FTD team doing that in-house. If I look at the returns on that versus using an external,
what do you call it? FDT?
Financial DD.
Oh,
financial
FDD. Okay.
So we have people who can do financial DD. We have people who can do. We have 3 in-house M&A lawyers. So to compare that to having sort of external lawyers, that's a big difference. Then we have tech people only doing tech M&A, tech DD, also a big difference. And then sort of we have the whole operation team that's helping us out on commercial aspects, et cetera, et cetera.
Economies of scale sound great. Can I borrow your team once in a while? Is that can we work that out?
We can discuss an hourly rate.
I'm gonna go invite them out for a beer here.
Absolutely. No, it's it's 3 for 2, 2 for 3. I don't know. No, but it's of course we're in a. We do 30 to 40 deals per year, right? So that's also when you sort of calculate your IRRs on having people instead of consultants on this. That of course helps a lot.
Okay, I have a feeling, and this actually just putting it out there, my current approach. I do go on those platforms like Upwork and other platforms, FinTalent, and we'll hire freelancers. And or referrals. I'll go talk to folks I know like you and tell you, hey, I'm trying to save some money. And you're like, oh, I know somebody that just left a role and they're kind of just freelancing right now. Perfect. That's kind of been my biggest wins. I know maybe if I was doing the international deal, I gotta do a little more legwork to find the resource. But is that fair to say is a good approach for
first timer?
Yeah,
absolutely.
Okay.
I think that's totally legit.
Cool.
So,
can I ask you questions how you guys operate over there?
Over
Visma. And it's the reason I'm asking is I've talked to so many corporate development. We'll put the quote corporate development professionals.
Yeah,
and it's interesting. You can have a PE-backed company and they really are maybe just consolidating industry, and there's some sort of direct correlation of this corp dev team's performance to the growth of that company revenue-wise. And then you have a larger strategic where a lot of it's supporting the leadership like we talked about and really facilitating that. And then I guess structurally too of just there's strategics you see that almost operate more like private equity firms in terms of the way they're structured. They're sort of a good financial discipline in sort of investments in, investments out, because a company like yours have done both. You've made some exits out.
Yeah.
And then there's ones that are very just strategic, extremely moonshot bets that it doesn't make any sense till 10 years later when they can tell everybody I told you so.
Yeah.
Where do you sit in that world? Because I'm confused. I've tried to do my diligence And at first I thought you guys were like the typical strategic, but then the more I looked at it, I'm like, that kind of not.
Yeah, no, I think it's a legit question. I mean, we do look at us as a trade buyer, right? We do look at us as a strategic buyer, but at the same time, we're also maybe more opportunistic than your average trade buyer. So if you look at the divestments we've done historically, that's all been. We've divested our services, our BPO division. We've divested our IT consulting division. We've divested the hosting division. We have divested retail software. So, I mean, the things we've divested has been because we want to focus on really being that, call it SMB, ERP, cloud champion in Europe and Latin America. So I think we're there now.
So you shifted strategy. I guess, can you tell me a little bit about that? Like, what prompted the company to sort of go focus in that specific area and divest those assets?
If you look at it, I mean, I can of course only relate to the last 16 years. But if I look at it, I say, where have we performed best? And it's that SMB, accounting, payroll, invoicing, tax. That's been the business unit that has always performed the best, and been sort of that North Star. So it continues to be, right. So for the American listeners, right, that would typically be Intuit, right.
Yep.
So in many ways, I mean, we're sort of an Intuit of Europe, and that business is just inherently much better than a services business, and it's valued thereafter as well.
Yep.
So I think sort of having that sort of very clear strategic vision that we've had, and I think HG as well. They've been a good owner, right? We've been working on this together, and sort of having that strategic mindset in really sort of nurturing that part of Visma, and now. Actually, that's still then the lion's share of what we're doing. And that's...
That makes sense in terms of how the strategy has evolved. And then in terms of, I guess, clicking down in how you operate, like you buy so many companies, what happens to these companies? Because a lot of them still carry their same name. They're not Visma this, Visma Norway, Visma Denmark. They're all operating their independent brands. You know, and I'm wondering, is this like some of the software roll-up companies, a lot of popping up from Canada, new ones, as long as one big behemoth out there, that don't really do a lot of integration. They sort of do some pretty light touch stuff on the back end and then let them run. And just, that's kind of the playbook, basically. It's just arbitrage the valuation over a scale. What does that look like for you?
Yeah, I wouldn't necessarily compare us with the ones you're throwing out there.
That's just an example I've seen.
I think we are inherently different, but in terms of that, call it soft integration approach, I agree. We also have that, even though we were probably 100 business units when I took over as head of M&A, and then we've probably done 200 plus deals since then, but we're still 180 or 190 business units now. So it's not fair to say that we don't integrate and we don't merge.
So some can merge.
So we do absolutely do that. When it makes sense, we do it. So, but I do think, sort of, if you look at it holistically, right? We like to buy entrepreneur-led businesses, like that has a driven entrepreneur to still have that on board. And I think 5 years after...
Founder.
Yeah, founder. Sorry.
Okay. Oh, well, no. I mean, yeah, both one and the same.
Yeah. So the 5 years after, between 70 and 80% of all founders, they're still on board in Visma.
What?
And I do think that's pretty spectacular, right? So that says a lot.
Keep them.
Yeah,
I would burn me out of there. I'm like done.
Yeah, and I do think that soft approach in terms of integration. We don't call it integration, by the way. We call it onboarding. It does, for me at least, it sounds much better.
Yeah.
But having said that, I think they still have a very strong ownership feeling, that they still own their own company, even though it's actually owned by Visma. Might be an earnout for 1 year, 3 years, 5 years. But the reality is we give them a lot of go-to-market freedom, but then we are extremely rigorous on a few but very specific elements. Right? First of all, financial reporting. 5th working day every month, previous month's reported. Full P&L, full balance sheet, full cash flow statement. There's no that's super important. And after all, I mean, we are working with accounting and reporting and tax systems. So it's a bit, we should eat our own medicine.
Yep.
And it also leaves you you're able to work with the companies much more hands-on than you are if you're getting the previous month on day 20 in the next month, right? It's already old. Having that 5th work day every month gives you actually fresh data that you can steer from. So I think we are very data-driven, right? So that's one element. Tech is the other element where they're extremely rigorous, right? Security. I mean, there is so much. You would know this as well, right? The cybersecurity, very, very important. I would even argue probably tech and cyber. That's the single biggest reason why we pull out of deals. If we don't believe that there is the right vision for the tech, I mean, we will pull out of the deal in a heartbeat.
Wow.
So I mean, we are almost religious on this. It doesn't need to be all fancy and super multi-tenant cloud from day one, but you need to have that vision. You need to have the belief, and you also need to have the organization to do it. If you don't believe you have that, then we will be quite upfront about that. And then we have, I mean, what I like to call is Visma is the biggest network of B2B software SaaS entrepreneurs globally, right? And there's almost 200 of them out there in the Visma ecosystem that are working together, collaborating, measuring, comparing, what type of KPIs are you following? Why are you doing so much better than I am? Okay, what do I need to do here to increase that, etc., etc. So we always see that. I mean, if you look at the companies we acquired in 24, I mean, back again to the type of businesses we acquired good businesses, right? Great businesses, I would argue. So they performed almost a rule of 50 on average. So, and I mean, that's second to none, right? It's really great businesses. And adding the fact that it was 33 businesses that we acquired last year makes that pretty unique, pretty solid.
Sick and tired of running M&A deals on the seller's terms? It's time to flip the script. The buyer-led M&A virtual summit designed for corporate acquirers who want to take control of their deals from sourcing to integration. Join us for a live M&A Science podcast episode with IVC Evidencia, the largest veterinarian roll-up in the world. Learn how they pull off 300 acquisitions in a year across 11 different countries at scale, at speed, without the chaos. And hear how Brenton Point Capital Partners, Easton Select Group, and others scale roll-ups at speed. Other M&A conferences will charge you big bucks for this kind of content, but here you don't pay a dime. See for yourself with the link in the description. This episode is sponsored by DealRoom. And if you're in corporate development or managing M&A deals, this is something you'll want to check out. On April 16th, we're hosting a live, all demo, no pitch session. It's a hands-on look at how teams are using DealRoom to set up deal rooms, manage permissions, and keep diligence moving without all the manual chaos. You'll also see how buyer-led can lead the process even if the seller isn't using DealRoom, and how that gives you a real edge, better visibility, faster timelines, and fewer drop balls. It's designed to give you practical takeaways you can use right away. Head to dealroom.net or click the link in the description to register and see how DealRoom can make your life easier. Back to the episode. What was the rule of 50? Remind me.
Sorry. So you take the growth rate plus the margin, the cash EBITDA margin.
Yep.
And then that ideally should be above 40 or better. Yeah.
Yep.
So when you're getting close to 50, I would argue it's pretty good.
Oh, so you're taking rule of 40 and saying,
Yeah,
10
exactly.
rule of 50.
So that's it's a rule of 40 metric. But the rule of 40 metric is then closer to 50.
Yeah, I like that.
So and still we see after 1 year, because of this, right? Because of you entering into this environment, we do see quite a big shift upwards on that rule of 40 scale. That you're actually growing faster and you're earning better margins.
Because why?
Because I think just starting measuring the right KPIs. I think there's so much inherently low-hanging fruits in these businesses that when they come into a professionalized system with a professionalized board,
start identifying.
You really start to push on the right things. So and that's also one aspect where we are pushing a lot is around sort of adding the right competence to the various companies, right? And this is, again, no companies, no process is the same. So if there is a company struggling or is scaling super fast, well, maybe you should have someone who has scaled a software business before. Maybe you should add HR competence. Or if it's something that a company that's struggling, has a great product, but struggling a bit with go-to-market channel, whatever it is, then you'll make sure to add that competence. We have entrepreneurs in this group that have grown their companies from 0 to 150 million euro ARR. So I mean, there is a lot of competence throughout the group, and sort of adding that right mix of competence to the various companies on a board level. I do think that is very, very important.
It's interesting. You have things that you described that are very like typical strategic, but then you got elements that sound very private equity-like as well. A couple of things I noted that you mentioned for retainment of leaders was the earnout, like 1 to 5 is used pretty common. You also mentioned just reporting accountability right off the bat, like getting your numbers in within 5 days a month end. The other piece you mentioned was the developing the community between the leadership so that they're there really comparing notes and getting value from each other as a part of the Visma community. That sounds pretty good.
Yeah, I think so. And particularly now, right? You even see AI is a big thing, right? And how to monetize on AI and how to use it. And I think we have several hundred AI experiments all across the group.
What's like the thing? I'm still going back to our deal, like the offer you put on the table to buy our company.
You need to prove your growth rate, though.
I got that. Don't worry. You got a great FTD team. They're gonna make sure. I was thinking about all the stuff I could buy with it because I could get that house on the slopes and probably a nice SUV to get up and down that mountain and stuff. But if like, how do I? I guess. How do you convince me? Because I'm like, the money part is good, but I'm still like, I can easily get this thing to another 20 million ARR. That's no problem. So like, why don't I wait till then? I'm wondering, like, how do you negotiate and get me to want to sell now versus, like I said, I'm always optimistic. It's part of the DNA of being a founder. Well, hey, why don't we talk, Sindre, in like a year? I'll show you. I'll prove out that we're going to get another 40% growth this next year, and you're going to have to put more.
Pay even more.
Oh, yeah. Yeah. Like, how do you convince somebody otherwise? Like, timing's now versus.
And it's a good question, right? As I mentioned, I think there are quite a few examples where we've talked to companies for decade plus, right? And that's typically the case. I'm not ready to sell. And that's a perfectly legit answer, right? That's your prerogative as a founder. I'm not willing to sell right now. Sorry. Let's talk in a year, 6 months, or 5 years, right? That's your prerogative. So I do believe, still, I do believe that we have a pretty compelling story to entrepreneurs. And we see that the Visma story actually resonates very well to entrepreneurs across all geos, right? And it's still that, okay, so you have your own company, you continue to run that, but you still have this giant corporation behind you that will help you, that will support you, that will give you access to the most valuable network of like-minded MDs, experiments, whatever it is that's going on in your own world. And I do believe adding that and the fact that you might have an earnout, so that you actually are having a bit of that upside yourself. So that 1 plus 1.
Is that earnout going to bridge? Because in my head, I'm like, hey, if I wait another year, you have to give me $30-40 million more. Is that earnout going to sort of?
We've had companies that have earned way more on the earnout than on the initial EV, of course.
What is the general terms on those earnouts look like?
So again, right, based on what type of deal you're looking for and what type of company you're looking at.
Man, this one, 10 million ARR.
Yeah. So you would typically either you could even use the rule of 40 scale, right? We in Visma we're still very interested in earning money as well. So I do believe rule of 40 is fairly good metric. And the higher
I'd be right at 50, right? If I got 40% year over year plus 1 million net, that puts me right at 50.
Yeah. So the higher rule of 40, the higher multiple you get. Sort of that's a bit of the dynamics typically.
On the earnout.
Of course, not on the initial. That will be the cat fight we need to do.
So you did the initial, but then, that's what I'm kind of wondering, because then...
but you need to find that price that's equally painful, right? And then what's good with us as well is that we allow them to also reinvest in Visma. You never get Visma shares as part of the initial EV, but as a working entrepreneur, you're allowed to reinvest.
Why don't you do that? I'm trying to roll over equity in these small crappy companies I'm looking at.
Yeah, but you're allowed to reinvest. So we don't print shares for in a specific deal, but we allow them to reinvest.
But why not? Why wouldn't you roll over equity? That seems like the most simple thing to do.
Yes, I would say yes and no. And there are things in doing that, and it's a dilution effect, etc., etc. So it's by letting them reinvest, more or less the same thing. So it's for me, it's I look at it a bit. Yes, as a founder, you're owning a small stake of something big instead of a big stake of something small, but you still have to nurture that ownership feeling, right? And I do believe that is important. To have that reinvestment possibility into Visma, I do believe that's, of course, also important.
I got a private equity firm. I'm just being frank with you here. I got a PE firm that's reaching out and talking to me, and they're offering the second bite of the apple. Where it's like, hey, well, I can do a recap of the business and then just take 30-40% off. Which I guess is at the right time. I guess it's a different player, right? You got buyout funds. So you say you got one fund that's willing to do a minority recap. You got a buyout fund that'll let me sit back with 20-30% of the company. These options look pretty good. How do you compete with those?
I think what we're bringing to the table, I think it's still pretty unique, right? I do have a strong belief, and I think we have a historical track record as well that shows that, yes, you're growing faster, you're showing a more scalable operation, margins are getting better, and you still have that ownership feeling. You're still running the business as it was your own.
Is that part of what you bring into the picture of like, hey, here's kind of how we would actually support you to grow where you as a founder are visioning going? Yeah.
That's of course part of the picture.
I know I'm like role playing with you right now, and I know like there's not enough context to make it like very detailed. So I'll give in a little bit there.
Yeah.
Because I can kind of sense that's where you're going for, but there's like we haven't been talking very long other than this podcast.
Go for it.
So okay, so
yeah.
So basically that's part of it. Do you see that happen a lot, where like some company you approach and they're kind of like, well, we're talking to the PE firm and blah blah.
I mean, if you look at our competitors, right, that might very well be a private equity, right? That's just the way it is, and I do believe we offer something else. I do believe with sort of the Visma equity, an earnout component, but I would still, I say, we know what market price it looks like. So, and we're not trying to be cheap. We're not trying to be. I've done too much M&A to try to say that we're if this is a tier 1 asset for us, then it's a tier 1 asset for us. I know it. Then it doesn't actually get down to that last dollar. It's more important to actually get that deal over the line.
So it's basically a total picture element that even myself as a founder, it's one thing to kind of look at dynamics of the deal, but then you're putting that against the total picture where, hey, if you're offering a really competitive offer, it's a really competitive offer with clean terms versus
and
here's a lot of nuances.
And I would say a high degree of deal certainty as well, right? I do believe that is important, right? When you close 90+% of all your LOIs, I do think that number speaks for itself. And to be honest, wherever we don't close an LOI, there has been something typically fundamentally different that has occurred during the due diligence phase. So, and that happens, right? It happens when you buy a house and it happens when you buy a company, right? Something happens during the DD and that's just nature of the business. And that's why you do DD.
You get great points. I think I'm in. I'm ready to sign a term sheet whenever you're ready to send it over to me.
Great. It's already in your inbox.
One thing to know about Visma, the business was publicly traded in the early days, and around 2006 they went private. Can you tell me a little bit about what that looked like when the business went private, and just specifically interested in just that relationship or ownership with private equity?
Yeah, I mean, as you were alluding to, right? This is the only type of Visma ownership I've seen. I've seen sort of KKR and HD and Sindre and GIC and sort of the PE ownership angle to it. I've not seen Visma as a publicly listed.
So you've seen the aftermath where it's public, it went private, then they're anticipating going public again, and then it got taken over by another PE firm, then went back to the original PE firm. So you can see some interesting PE drama.
Absolutely, but I wouldn't necessarily call it drama, right? I think still the red line in sort of the Visma PE ownership story is HG. Like they were the ones delisting us, and yes, they were down in a minority position, but they've always been there, and I do believe sort of they have definitely helped us in sort of that context of being that counterparty that's always, or stakeholder that's always been there for us.
Is there anything bad you can say about HG?
This is going live, right?
So listening. That's where I'm testing you right now.
Yeah, no. And the reality is, I think Nick Humphreys and his team, right? I think they're doing a great job. I think they have also acknowledged that letting the Visma management team do their job, that's actually very important for a PE firm. So they've given us a lot of freedom in the same way that we're giving a lot of our business units a lot of freedom as well.
What was the biggest win when working with a PE firm like HG? Like, what like really impressed you? Like, we'll keep the bad press out. I'll get that later. But what was like the stuff that really wowed you of like, I'm pretty impressed of smart money here?
Yeah. No, but I think HG in particular, right? They are a tech investor, right? And sort of led by Nick Humphreys, who's always been in the board and sort of is the executive chair at HG. I think sort of having that long-term vision, sort of knowing what good looks like, and having that long-term vision, and particularly in an M&A context as well, right? They are of good help, right? We're driving the agenda, but I do think sort of having that support from the owners in driving that agenda and sort of helping to nurture the M&A strategy, I think that is that has been of help, great help. So absolutely, they are very, very tech savvy.
They encourage you to do M&A. They know the industry. Is there anything they do? Because all these private equity firms, I'm trying to be nice here, they all like brag about having a value creation model. They have these big portfolio support teams, especially at this size, right? Once you're over like 10 billion AUM, they have a pretty sizable portfolio support, portfolio operations, whatever you call it, teams. And they're all focused on value creation. They recruit a bunch of consultants, ex-consultants in there, bankers. Yeah. Do you see that being a value add for you?
Both yes and no. I think HG, they have now a very good view on when to help us and when to leave us alone.
So there's a good component there of like when to leave you alone.
Yeah, I do believe actually and as a private equity owner, I do believe knowing when to help and when not to help. I think that is almost as important as anything else.
Yeah, examples of that, of like when not to help, because
I think Visma, right? If you look at us, right, we are a double-digit grower organically, and then M&A goes on top. Good margin expansion, 30+% EBITDA margins. I mean, the business is performing fairly well. So it's also, clearly the management team is doing something right. So knowing when we are doing something right, and knowing when actually they should probably step in and do some changes. I think that's for any given private equity owner. I would say that is imperative to know, when to get your hands on the steering wheel and when to leave that to management.
So don't be an asshole where you're constantly pushing for more.
I think that's a good
just to push for more.
Probably a good good sentence. Good learning.
I talk to CEOs that are PE backed. That's kind of like the conundrum. It's like you need to push more growth. You need to cut costs. You gotta, which is like a never ending tale. But I think there's a good point. There's like a right when it's right and when to back away.
Yeah, and I do believe sort of HG they also have that long-term view, right? I mean, they've almost been a shareholder in Visma for 20 years. So they know us fairly well, I think it's fair to say, right? So they have that long-term view and
how does that work? I mean, is it like in the same fund for that long, or do they sort of change funds after a while?
Yeah, typically you also change funds.
But they believe in you, so they keep going after investing in the company and adjusting.
Exactly. There's a bit of I would say it's a bit of a elaboration or an expansion of the traditional PE model, where you typically own an asset for 3 to 5 years and then sell it off. But every now and then you stumble across very, very good assets that you actually don't want to sell. And it's almost like an evergreen sort of investment. And I do believe sort of that model that HG has applied with us, I do believe, and sort of bringing along investors together with them, I do believe that's for certain assets like ourselves, I do believe that has been a good strategy.
That's played well. Sounds like it's been a good relationship. Anything that you've been like really impressed of, things they've done to add value? Like I said, I'm just wondering if a lot of things you described are very private equity-esque, we talked about earlier, of the way you bring the leadership teams together and hold those kind of events and things like that. But I mean, part of me is curious too, because you're just such a large company to be owned by a large private equity firm.
Yeah.
It's just like, where does that level of sophistication turn into? Because I get it when it's like a small company and you got to be so hands-on it. And you're sort of like doing the M&A for that company. Here, nobody's doing M&A for you. They're sort of, watching you do everything and on more of the sidelines. That's why I'm curious, like, what does that look like for them to actually add value in a company to your extent?
I think they are a good partner to have in the context of them actually. I mean, they know us very well, right? I mean, there is no BS. It's sort of, it's straight shooters, and we can talk quite directly with them. And I do believe that since they know us that well, they also know where they can provide value and probably where they should leave us alone. So whether that is opening up doors towards other companies, towards whatever it can be. To be honest, it can be many things.
Is it fair to say it's more like the strategy stuff? If they kind of hear things and sort of bring it to you as sort of an extra pair of eyes and ears, and
sort of the overall
executive leadership thinking,
B2B ecosystem and supporting the long-term strategy of Visma. I think that's where those type of dialogues, that's where we typically have good discussions with them as well.
The PE firm makes sense, how you work with a PE firm. One of the things I was curious about was, it's interesting for you to expand in Europe. It's not hard to fly to these countries because it's like an hour flight and you can visit them and make new friends. And it's pretty cool. That's the one thing I really like about Europe. But then when you take this platform and expand to Latin America, I'm curious about that because that's like talk about crossing the pond. I think you cross like 2 ponds when you do that. Can you tell me like how does that work? Like, how do you see M&A being different from?
Yeah, no, I think, I mean, long story short, right? We entered LATAM through a Dutch acquisition that accidentally had a operation in Buenos Aires.
Accidentally? Like you didn't know?
No, yeah, well, we knew, of course, but it was relatively small back then, right? 5 million euro top line or something. Now, I mean, we have 60 million probably top line, growing very fast with good margins. For us, I think, we are right now, I mean, we are the biggest cloud SMB ERP player in Europe. 2.6 billion ARR euros, growing quite fast. I think we sort of, the more we've learned around Latin America, the more it is appealing, to be honest. I think we've taken this multi-decade view on it and just said, you know what, Latin America is actually a pretty great place to be. It's quite tech savvy. Of course, it has its issues, like every other country. But I would say actually Latin America is more tech savvy than many larger economies in Europe even, right? So you have multi-tenant, super modern cloud players in Latin America of size that you actually are struggling to find even in Europe. So I do believe sort of that component of it important. I think also the regulatory changes that are happening, right? Latin America was actually quite early on in terms of e-invoicing, e-tax, these type of things. Whereas Europe, in that context, I don't think you have e-invoicing in the US even, right?
No.
Many countries in Europe don't even have it. So, I mean, Latin America is on the forefront there. So I do believe that a lot of these things is making Latin America much more appealing than what maybe people sort of outside in actually initially believe. I think there is a lot of probably biases out there towards LATAM, but we look at it as a great region to continue to drive consolidation as well.
Is that because you think you're going to run out of market over here, or is it hey, this is something we can replicate the platform into this just geography expansion?
Yeah, the reality is, I mean, I'm not afraid of running out of total addressable market in Europe. No, Europe is very big. And even in Norway, right? It's only 500,000-600,000 businesses here. But even here, there is still plenty of things to do. So I'm not worried about the TAM per se, but I do see an opportunity to lead a consolidation in LATAM. So I do think that is actually pretty appealing. And it's different. Doing business in LATAM is different. Also a little bit back to M&A is local. We have a very driven management team in LATAM. We also have M&A members that are from LATAM. So I mean, it has that local aspect. Trust is very important compared to trust is always important in M&A, but it's I would say it's even more important in LATAM. So you have to build and gain trust over time. And I think we've been in LATAM now for 7-8 years, right? Over time, we've shown that we've gradually expanded that business through M&A and organic growth. And I do believe that rumor is also running ahead of us. So I think we have a good reputation in LATAM, and I think there are so many opportunities in that country. And the reality as well, I think sort of our Norwegian heritage from Visma, right? We are a Norwegian company, even though we are becoming more and more global. I think that heritage Norwegians, we are relatively, we are commercial and we are opportunistic, but we're also quite humble, right? We know that we are not kings of the world. Oslo is not the center of the universe. And I think being humble in the fact that humble is not a weakness. It's actually a strength when you use it right. And I think we're not going to tell anyone in Brazil or Chile or Buenos Aires how to run their own ERP business. Not how it works from Oslo.
Right.
They will tell us how to run it, but we will help them.
Yeah.
That goes with Spain and France and Germany as well.
That's a good point about the cultural compatibility.
So I think that humbleness, I do think that is actually very important.
Find it a very notable thing in Northern Europe. So it's especially here in Norway. The little time I spent out here.
Yeah. It's but I think, humble is not necessarily a weakness, right? I think humble is about being smart, actually.
Is that why you skipped over America, went straight to South America?
Well, I think there are several reasons, right? One is, I think we've talked about Intuit earlier, and when you see one giant big player that's doing great, by the way, it's do you really want to pick up the boxing gloves? And I think for now, short answer is probably not. I think we Europe and LATAM for now. It's and then, we are becoming more and more global, but for now, there is plenty of opportunities outside of the US.
When you do these deals, do you look at synergy between your portfolio companies? It sounds like you're buying a lot of companies that sort of are going to continue growing organically, and then you do some light, back-end integration. But is there like a perspective on synergy between these acquisitions or anything like that that's more cross-selling? Or
it is. It varies a lot. Again, right? It's a bit case by case. Like quite many of these companies, if you're a 10 million ARR business growing 50%, then yes, we will help you, but you're clearly doing something right.
That's the theme of this whole podcast. There is no one answer for all in M&A at all. Like anywhere in M&A, there's no one answer for all.
It's actually true, right? And I guess that's what keeps you running for almost 2 decades, right? Every deal has its own life. There are nuances. You're learning new things. There are new cultures. There's new stuff to learn on every single deal. And I think that's what we love about M&A, isn't it?
So if you don't have that from a takeaway from this podcast, it's just have this adaptive, agile mindset, and you'll be fine.
Yeah, no, but I do think sort of looking at the Visma M&A story as well, I think we have quite a lot of tools in the toolbox. We're quite pragmatic. We really try to get that deal over the line if we sort of deem it worthwhile.
What's the future look like? What do you see for trends that's going to shape the future of M&A in the global tech industry?
The tourists from 2020, 21, 22, they're gone, right? But there's still so much capital going into B2B software, right? And only in Europe, I think last year it was established almost 100 of these type of permanent capital vehicles only investing in B2B SaaS software businesses. Even more in the US, right? And they all have different angles to it and sort of unique selling points. But at the end of the day, they are sort of doing more or less the same thing, trying to roll up vertical market softwares within, all types of verticals. I think you will continue to see a trend in that, where the reality is there is so much software companies out there, and it's only getting, I feel, even though it's a big consolidation, new software companies are just popping up. So I think you'll see more of that, but at the same time, I think you will also see that more of these will struggle, because I think you will see the ones that actually have that call it serial acquisition capability and the serial acquisition muscle. I think those will be highly valued, and I think those who are left at the station.
That's kind of interesting view of like a lot of platforms are popping up, but ones that'll actually be able to scale is to be determined. That's a pretty interesting view.
Yeah.
And then
I think time will tell who that will be. But I do think you will also see a big constellation within these platforms. And there's just so much money out there, and everyone wants to be invested in software.
you're hinting at your next move. You're going to be buying some platforms. I like this. Can I come work for you? I could be a good buy-side advisor, banker. Just give me a good fee structure. Just a couple points a deal.
Yeah. Send me a proposal.
I will.
Yeah.
I got to ask you though, what is the craziest thing you've seen in M&A?
Yeah, I mean, there's always been this. We bought stuff and then off balance sheet they've had a couple of cabins, or they have had a yacht, or they've had a couple of these things. I don't know how crazy that is.
All right, well I'll give one for you. I think the craziest deal toy I've seen in my life is the stuffed eagle that you have in your office. And I've gone to so many offices. Corp dev, but usually the biggest collections are investment banks of all these little deal toys. Every time you close a deal, they sort of send it to the principal parties involved. But I went into your office. I was like, "What the hell is this?" And you had like this live eagle, and I don't know what the customary Norwegian thing of creating that.
No, but as you say, right? It's at least the coolest tombstone I've ever received, and it was a project called Project Eagle. Not gonna name the company behind, but there we actually received then a stuffed animal, a stuffed eagle.
I'm gonna have to post it on social. So those of you interested in seeing it, follow me on LinkedIn. Sindre, this has been an awesome conversation. Thanks for taking multiple hours of your time today and helping me become a better M&A scientist.
Great. It's been a great talk. Appreciate it. And it's been fun.
If you've listened this far in this podcast, fellow M&A scientist, love to hear from you. Whether it's some feedback, topic ideas, criticism, take the criticism so I get better at doing this. I always welcome those conversations. Usually LinkedIn's the best way to reach me. Till next time. Here's to the deal.